financial argument. Follow us on YouTube.
Let's get into the economic collapse financial news. Now, we can see that the economy right now is continually deteriorating. We've been talking about this for quite a while. And the people are looking at the situation and they're realizing something's wrong, because we're hearing more companies, we're hearing them lay off more people, not 100, not 200, but in the thousands. And we can see banking systems, they're starting to fall apart, and we're starting to realize that everything is starting to deteriorate, implode. We see consumer confidence right now, and it's crashed to a 2-year low. Now, of course, they're blaming the elections. But when we look at this, we see that the stock market is at record highs. Gas prices, they're at record lows. Yes, they moved up a little bit. We see the Fed is continually telling us that we're in this incredible recovery. They're going to be raising the interest rates anytime soon. We see that Obama is out there telling us that the economy is absolutely fine. Everything is awesome. But we see that consumer confidence is declining right now. And the entire sentiment index slipped in early October to its lowest level since last September, and the second lowest level in the past 2 years. Perhaps the most concerning figure was a decline in the expectations index, which fell to its lowest level in the past 2 years. And this is due to the declining incomes in households, where we have households of those people making $75,000 or less. And they're looking at the situation, the economy, and saying, something's wrong here. Something's not right. I don't feel confident anymore. Because when we look around, we see that corporations, they're continually laying off people. HP is going to be cutting about 3,000 to 4,000 jobs. Fujitsu is going to be laying off 1,800 people. And we see retail sales. Now, the corporate media is out there, and they're trying to make the case that retail sales are amazing. They're up by 0.6%, and everything is absolutely fine. Well, when we look at these numbers, we see that the reason why retail has increased, it's because fuel prices have gone up. And actually, when you look at retail sales, the slow retail growth that we're seeing right now has led to recessions. And when we look at the retail numbers, and we look at the breakdown, we see gas stations, well, that pushed the percentage up. But when we look at sales in stores like electronics and appliances, that is down negative 0.9%. Health and personal care stores, they're down negative 0.5%. General merchandise stores, down negative 0.4%. Department stores, down negative 0.7%. And of course, as we know, we're coming into the holiday season, and we know that sales are going to pick up a little bit because people are going to be buying gifts. Thanksgiving is coming. Halloween is on its way. But when we look at retail sales, we see that sales are continually declining. And the trend is down, not up. And this is going to be a problem going forward. We see in the auto loan industry that sales of automobiles in the U.S., well, they bubbled over in recent years. And we see that the seasonally adjusted annual rate of 17.7 million units at the end of September is quite a bit. Actually, to put that number in context, a 15-year useful life would imply that's more than one car for every driving age person in the United States. Obviously, that's likely not sustainable, which is probably why Ford executives admitted on a recent conference call that U.S. auto sales have likely reached a plateau. And we can see right now that those subprime borrowers who purchased a car, took out a loan, well, they're having problems. S&P is reporting that those people that are more than 60 days on about a 4.85% of auto loans in August, they are delinquent. And it's the highest level since January of 2010. We see rising delinquencies are readily apparent in GM subprime securitization, where 31 to 61 day delinquencies have been on the rise since 2012. We see year-over-year change in 61-plus day delinquencies for GM. They have been growing, and they've hit double-digit rates for several months now. So what we're seeing is we're seeing the bubbles. They've been blown up. They're very big. They're getting ready to pop. And we're seeing it in the auto loan industry. We're seeing it in the housing market. We're seeing it in the stock market. We're seeing it in the bond market, the derivatives market. It is all coming down very, very quickly. Now, we know they continually forecast the GDP numbers to us. The GDP Now model lets us know how the country is doing. And of course, they start very high all the time, 3%, 3.5%. Then they revise it down, And if we look, we can see this is what they've been doing. In 2016, we see that every single quarter they've been revising the numbers down further and further and further. And what we're seeing right now is that when we add all of this up with all the new revisions and everything like that, at this point, the economy will grow at a rate of 1.4% in 2016. And this is the manipulated number. Think about this for a second. Everything they've done to create this GDP number has been manipulated. Take away the manipulation, this number is completely negative at this point. So we're in a situation where the economy is continually declining, no stopping it whatsoever. Manufacturing has left the country. What's keeping up? What's keeping the GDP in the positive range? Well, Obamacare. And we see right now that the U.S. government, the central bankers, they have been writing legislation throughout the years. And, of course, what they do is they say, okay, you know what? Let's create some legislation where, people have to buy treasury bonds, but that won't come due until maybe 2016. Let's create legislation in 2014, and that won't come true until 2016. So people really don't care. And way back in 2014, they decided that they're going to create a new rule, the SEC's 2A7, which is a money fund reform, which was adopted in 2014, where it says the prime money market mutual funds, those that invest in non-government issued assets, such as short-term corporate and municipal debt, well, they will not be able to withdraw any of it if there is an economic crisis. Now, the rule was created to prevent chaos during the Lehman Brothers crisis, where they went bankrupt in 2008. And the other reason they did this was to force everyone into treasury bonds. Because what they wanted everyone to do was take your prime money market funds, convert them into government funds, and that would be treasuries. Because we know we have a problem because countries are dumping treasury bonds. They needed someone to pick up the slack. So over this time period since 2014, many of the prime money market funds have been converting out of municipal debt, short-term corporate debt, into government debt. And then they wouldn't be hit if there's an economic crisis. They would be able to get their funds. Well, realistically, will they be able to get their funds? Most likely not, because the government will come up with some type of reason why at this point you just cannot get it. Because if this system is coming down and crashing, how in the world is the government going to say, okay, we can now pay out and give everyone their currency? Because countries around the world, they're going to be saying, okay, you know something? We want our currency for the treasury bonds. Investors are going to say this. And everyone is going to hit at the same time when this whole entire system comes crashing down. Because this is what normally happens. People want their money. And of course, the value of this money is going to continually decline. Now we see Deutsche Bank, well, they're in big trouble, as we know. And just the other day they said, we're going to cut about 1,000 jobs. Well, now they're up to 10,000. And you have to remember, they already announced they were laying off 9,000 back in October 2015. So this is an additional 10,000 people. Do we think this is where it's going to end? Absolutely not, because right now they're getting rid of, when you add these two numbers up, about 20% of their workforce. And when you add these numbers together, it's pretty much 1 in 5 people that they're going to be laying off. And I think this is not even enough yet. Because what we're seeing with Deutsche Bank is that investors are getting scared, shareholders are getting worried, they're worried about the long-term strategy of the bank. We know that the German government has ruled out bailouts because what they said is that they have a different bank resolution system that was created a couple years ago. And we all know what that is because we've been talking about this for quite a while. They're referring to the recent legal changes in Europe, which means the European governments, they can't go ahead and bail out these banks. They have to do a bail-in to creditors and, in some cases, yes, depositors before they shore up a struggling bank with taxpayer money. Well, that money that's in the bank is taxpayer money anyhow. Because who do you think has the money in the bank? It's the people. So what they're going to do is they're going to give them worthless bank stock. They're going to put a hold on your account. They're going to go in electronically and siphon off what they need, just like they did in Cyprus. And they'll tell you, well, the stocks that you have, they'll mature. You'll be able to trade them in within maybe 5 or 10 years. And at this point, we can't allow you to take out more than X amount each week. And you can't transfer your funds out of the bank either. So your funds are stuck there. And as we know, as the bank continually slides into an area where they can't recover and it affects other banks, this is going to be a complete disaster. Now remember, during this period, the FDIC is not going to step in because they're going to be doing the bail-ins. If the banks are hit with a cyber attack, the FDIC is definitely not going to be stepping in. And right now, the FDIC and the other insurance around the world, there's not enough to cover all of this. It's completely impossible. And what we're seeing now is a complete breakdown of the system. It starts very slowly in a certain area. The governments, the corporate media, they continually tell you everything's going to be fine, don't worry about it. And they continually tell you this until it's too late. And what we're seeing right now is the beginning stages of this. They're letting you know that they're having a problem. And they're telling you that everything is fine. And when you put these two things together, it's time to get your funds out of the banking system. That's my personal opinion. Maybe put it someplace else. Because you know eventually what's going to happen is you'll not be able to get those funds out of the bank. This is what happened in Cyprus. They don't tell you in advance. They don't say, hey, listen, next Thursday we're going to be doing bail-ins, so whoever wants to get their funds out of the bank, go ahead and do it right now. They're not going to do that. You're going to wake up on a Friday, They're going to say the banks are closed. It's a banking holiday. Don't worry. We have everything under control. The banks will reopen on Monday. And guess what happens? During the weekend, your account is locked. You can't get your funds out. Monday comes, they say, well, we can't really open the bank right now. We're going to open it maybe on Thursday. And still, you can't get your funds out of the bank. This is what happened in Cyprus. So we can see this is what they're preparing for. And if they do this to Deutsche Bank right now, there's going to be a mad rush of people around the world rushing to get their funds out of the bank because they'll be able to see what exactly is going on. And you'll see that the first country that's going to do this is Germany. And then it's going to spread throughout Europe. And of course, here in the United States, the corporate media, they won't be mentioning it that much. No one will really understand what's going on because it'll be just omitted from the news. They won't tell anybody until it's too late. And this is why we're following all this, so it's not too late for everyone. So everyone understands where we are headed. We are headed for this massive collapse of the system. It's already started. We're already in a recession. There's no going back. They already have the plans laid out to collapse this system. And it's just a matter of time when everything just comes crumbling down. So everyone should, at this point, they should be getting prepared for what is about to happen. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.